That's more than controversial. Now you're going into a very dangerous area.
You heard me say it over and over again. This is the year when peak demand itself peaks. The IEA is going to flip. BP just announced they're getting rid of their targets. I mean, we're moving on. Net zero is yesterday. AI is tomorrow. The idea that oil demand is going to peak by 2030 is wrong. And the consensus is wrong on that, and it's going to shift.
Welcome to another edition of Year in Business. We're joined by Bob McNally, the CEO of Rapidan Global Energy, and also the author of Crude Volatility, the History and the Future of Boom-Bust Oil Prices. Bob, great to see you.
Youssef, thanks for having me on. Congratulations on this great new podcast, and it's great to be with you again.
Thank you very much. You just got back from a whirlwind tour. Run us through some of the stops you made along the way.
Well, I was in Cabo, San Lucas in Mexico. Somebody had to do it. So spoke at an energy conference there with Moelis. A lot of companies and investors there and officials. Then in through Houston and over to Saudi Arabia, so Aramco and Dhahran, and then Riyadh for the International Energy Forum meeting. So lots of discussions with both U.S. but international energy investors and companies. And three things on their mind, Youssef: Trump, Trump, and Trump. The implications of the election were top of mind. Yeah.
We'll get to that in a moment in more detail. Run me through what your information diet is like in the morning, right? Because there's just so much news flow, especially now with Donald Trump back in the White House. How do you limit and filter out the noise?
It's a great question. You know, in all my 30 years, I've always been a news hound. I love following the news. But I think one of the hardest things to do is get objective news these days. News has become very biased. So what I do is I start from the left to the right. In the U.S., I start from the Huffington Post. I find the most left-wing news organs I can, and then I go to the right wing, Newsmax, Breitbart, and everywhere in between, New York Times, Washington Post, and so forth. And then I check Bloomberg, and then Reuters, and then I go abroad, and I do the same thing in Israel, Haaretz to Ynet. I read TASS. I read the Chinese Communist Party. Then I read the opponents, and I read others. So I have a sort of a system where I just gorge on as much data and information as I can, trying to be as objective and capturing all viewpoints. And then Twitter, you can put Google alerts, and Twitter can enable you to sort of focus in.
How much time do you allocate to that, would you say? It sounds like it's like at least an hour in the morning.
It's a passion of mine. If I do it, if I have the time, I will take a good hour and a half to 2 hours of new. I'm an early person. I get up early. And to this day, I used to be when you have a stack of newspapers. In the old day, before the internet, you'd have a stack of newspapers waiting for you. Now I've got that internet, and I tell you, it gets a spring in my step. So I'm at least an hour and a half each day.
How much of that is being absorbed now by AI? I keep trying to remind myself that I got to make more use of whatever AI platform it is, be it ChatGPT or now DeepSeek or sort of XAI. How much of that is finding its way into what you do in sort of the first 3 or 4 hours of the day?
Yeah, not so much on the news search. I expect that to change, however. I'm just amazed at AI's capabilities. I don't have a stake in either of them, but this Grok 3 on X is just fantastic. You have to check it. You get stuff wrong. But when it comes to queries, why is Brent moving so-and-so this week? Or please summarize this long paper by this Trump economic advisor and tell me how economists might try to refute it. It is able to think and be creative, and it's getting better and better each day. You can't trust it completely. So I use it more for deeper dives, for queries, than I do my news coverage. But I imagine eventually I'll be incorporating into how I survey the news as well.
In terms of your different pathways to using mobility services and whether or not you have a car, and if you do, or if you can make a choice to buy a car, what kind of car would you buy to get to work? Would you get a Tesla or would you get a Suburban? Which side of the debate are you on?
So I'll just tell you what I drive. I drive a pickup truck, a diesel, pickup truck, and but I was an early adopter of a hybrid electric vehicle way back when I made partner at Tudor in 2007. My wife still drives that. So I kind of always wanted to have a pickup truck, and it's diesel. I get 28 miles per gallon. It's got a extended range tank. I get 1,000 miles, Yusuf, 1,000-mile range when I fill it up. So I like having that capability. But we have a hybrid electric in the family as well.
I mean, I just could never get comfortable in a Tesla. I mean, the seats are not that well designed. And then like the suspension just doesn't handle speed bumps comfortably. And so I've never been a fan, either as a passenger or as a driver. It's never really appealed to me, despite the immense power of the brand. I put something into ChatGPT just to kind of see what it can give me. Speaking of what you just mentioned in terms of how you integrated that into your workflow. And I asked it, how much cheaper energy is today in real terms, right? So if you think back to 2014, if you use that as your starting point and adjust for inflation, $3.44 in 2014 is equivalent to about $4.62 in today's dollar for the price of US gasoline. That means when accounting for inflation, gasoline prices in February 2025 are lower than they were in 2014. People forget that sometimes, I think, how much it's actually come down in real terms.
You're right. You're right. And, though, you see evidence of this even in the political discussion. It used to be, back then, $3 a gallon gasoline would get folks upset. Now we go through $3 and it doesn't get folks upset. Really, I would say $4 a gallon is the new kind of political threshold of attention and pain and so forth. And perhaps that reflects the fact that the consumer, whether he or she is aware of it or not, because the price of gasoline is probably the most visible price in our lives, certainly in the United States. We see it every day. Even if we're not buying it, we see it. And so it's probably at least subliminally being monitored. And it's a price of life because oil is the lifeblood of modern civilization. And I think we're getting more accustomed to seeing numbers, nominal numbers in the $3 or even $4 range. And maybe we're subliminally, relaxed because in real world terms, it's actually gotten cheaper, as you mentioned.
Are you surprised at how stable it's been relative to its history? I mean, we've been quite a narrow range if you take sort of a 15, 20-year chart.
Well, okay. So as you know, I break up the world of energy, the history of energy, into eras in which there was an effective, durable, keyword durable, swing producer, in which case volatility was very low across decades, where only when there was wars or recessions would you have volatility. And then you have periods like we're in now. Now, while no question, oil prices have been very stable over the last 6-9 months or so. A lot of that due to, frankly, credit where credit is due, wise OPEC plus policymaking. If you look back over the last 10 years, you started out with 2014. I mean, we've been on Space Mountain roller coaster, right? Even going back a little further, we quintupled from 03 to 08 to 143, then crashed to 35 in a few months, soared back to 100. And then when Russia and Saudi Arabia couldn't get along, we crashed to in 2015 down to $26 a barrel. 2016, $26 a barrel. Then Russia invaded Ukraine. We went back up again to 120. So I think if you look at the amplitude of the crude oil price range over the last 10 to 15, even 20 years, and compare that with previous decades, even the previous 90 years, we are on Space Mountain. We're on a roller coaster. That's really
that's a fascinating perspective there. I mean, now you have a potential deal between the U.S. and Russia around the war along the Ukrainian border. And, if you do get that deal, what is that going to do to energy prices globally? I mean, let's start with kind of crude oil. Do you expect a major correction, or you think a lot of it is already telegraphed in the price?
I don't expect a major correction in crude oil for the simple reason that so far sanctions haven't removed a lot of Russian crude oil. Right? Sanctions have removed gas, but Russia has just reshuffled its crude oil. It's selling to India and not Europe. And the sanctions were designed to achieve that because nothing scared Washington more than record gasoline prices in the middle of 2022. Okay, so now that may be changing. On the way out, President Biden actually put in tough sanctions that if President Trump continues with them, will remove Russian oil. And we'll see. Right now, we're in the good cop phase. President Trump is, reaching out to Putin, trying to establish a rapport, et cetera, et cetera. But we'll see. This has a few more chapters to play out, and I wouldn't rule out that we actually put into place sanctions that would then cause Russian oil to go off and prices to go up. Gas is a different story. I'm not a gas analyst, but if you look at how energy markets have reacted since the recent Trump comments on the war, gas has reacted more than oil.
Okay, so let's agree that Donald Trump in his second administration is clearly keen on ending some of the U.S. military engagements abroad. He wants to scale back, right? He wants to create more peace, more stability, make it more friendly for capital deployment and sort of America flexing its global capitalist muscle in a way, right? So we're on the same page there, okay?
Yeah.
So now the question becomes, what happens with the geopolitical risk premium? Okay, so you're saying if they reach a deal between Russia, US vis-a-vis Ukraine, not a big deal. Okay, is it going to be a big deal if that extends beyond that, though, to say the Middle East or other parts of the world where we have sort of hotter engagements?
Well, I think the most important places are Russia, Iran, and then China. Let's take Russia first. With Russia, it depends on what we get. Do we just get a ceasefire like what ended the Korean War, or we see in Cyprus or Kashmir? Just they stop shooting, but there's no real relaxation of sanctions. Then I think it's sort of baked into the price right now. I don't think you see a big impact on energy, but we just sit here and stare at each other, and there's always the risk of flare-up. So let's call it a frozen conflict is most likely in Russia. With Iran, it's the most serious. We're telling clients, Youssef, one way or the other, Iran and its nuclear program are likely to be separated. And it can happen diplomatically, and President Trump would far prefer a diplomatic setback to the nuclear program. He's hoping for a repeat of Libya, where Libya ultimately decided basically to hand over all its nuclear weapons to the United States. We put them in Tennessee. Okay. President Trump would really prefer a nuclear, but if we do a diplomatic deal, but if we don't get a diplomatic deal, the difference between now and the last 5 or 10 years is Israel is ready with a military option. And after 10/7, Israel is more willing to use military force to achieve its objectives. And Iran is prostrate. So I think Iran is the big geopolitical wild card. And then finally, there's China. And here it's probably mostly a macroeconomic issue. If we get into an escalating trade war with China, we really risk damaging the global economy. Just a tariff and non-tariff barrier trade war with Europe. So that's another risk as well.
So what do you say the premium is at the moment in terms of geopolitical risk in a crude barrel of oil today, if you had to kind of, even if you gave it a range?
2 to 7 cents. I think it's almost minimal. Youssef, the oil market is in boy who cried wolf mode. They're not believing it. I mean, we even going back to 2019 when the Saudis hit Abqaiq, the Iranians hit Abqaiq. So let me repeat that. Even going back to 2019, when the Iranians hit Abqaiq in September of that year, that risk premium didn't last too long because the oil came back. The Russian risk premium didn't last too long because the oil never went away. Israel and Iran have exchanged direct blows. The Houthis have shut down the Red Sea, and we still haven't seen a lasting premium. Oil markets are fairly well supplied. So I think traders now have adopted the view, that very skeptical view about geopolitical risk premium. It tends not to last. So I think there's actually very little in the price right now.
I mean, you can't blame them, right, for reducing the geopolitical risk premium, because you look at what Iran's done over the last few months, and I'm hearing this from several sources, is they turned out to be quite a paper tiger in the end, at least across this x-axis. Of course, if you extend beyond, into the next period, this could all change. And that's what you're saying is, yes, the response was underwhelming in the last 6 months. It doesn't mean that once you start sort of interfering more with its nuclear program, that you aren't going to get something a lot more aggressive, right?
Right. Now, I remind folks that the story of the village boy who cried wolf did not end well for the boy or the village, right? And just because things seem to be very calm, undisturbed, I don't think that's necessarily how they're going to last. This Iran nuclear program is a huge risk and a huge opportunity. Don't get me wrong. If we get a diplomatic breakthrough deal, you could see President Trump in Tehran and oil down $15. as Iranian oil production even increases.
$15.
Well,
just like that. Yeah.
If we have a massive deal with Iran, even though they probably can't increase crude production much more than they are right now in the near term, but if we have a comprehensive diplomatic deal with Tehran, which is probably what it would take to get it to give it up its nuclear program, and we talk about Western and U.S. companies going back to Iran, yes, I think that is probably one of the most bearish supply side scenarios. I'm not saying it's very high, but it is out there. President Trump would like it.
I'm looking here at some of the announcements related to tariffs on Canadian oil and Mexican oil, 10% on Canadian oil and 25% on Mexican oil, even though the implementation is currently on hold, of course, pending updates on border security and immigration enforcement. How disruptive, this goes back to what you said at the beginning, Trump, how disruptive could this be to how we understand energy prices?
Well, I think it's mainly a challenge and disruption for Canadian crude producers and especially sophisticated, complex PADD 2 or upper Midwest refiners, right? Interrupting with that flow is not good for those two folks. It's also not good initially for Northeast U.S. Refined product gasoline consumers because they get a lot of gasoline from New Brunswick. And if we put even 10% on refined product imports, that's on a much higher basis than just crude. And then with Mexico, I think it's less of an issue. They'll be reshuffling their other sources of heavy crude. Don't get me wrong. It's not a good thing for efficient and cheap markets, but it's not a showstopper, especially if it's only 10%, if it's gradually phased in. Again, not something I think that would be good for the industry or good for relations, but it's sort of mainly a problem for Albertan crude producers and Michigan, gasoline consumers.
The U.S. president has called for an increase in U.S. oil production, and he keeps referring to the statement, drill, baby, drill. And, as much as he wants to create an environment that's going to help with that, the reality is that companies are expected to keep expenditures on hold. Could you talk me through what is happening with some of these balance sheets and the cautiousness that we're seeing in sort of with U.S. suppliers specifically?
Right. So what we see when we look at the balance sheets, the earnings calls, the Fed surveys, and our own conversations with our clients, the caution is the watchword. Yes, they are becoming more efficient at their completion rates. They're squeezing more barrels out of that rock with existing rigs and existing completion rates, but they're not adding to it. They're not confident about the investment environment in the next few years, despite all the goodies, really, the benefits that President Trump and his administration will bring to them. Why? The main reason, I think, is a fear about an oil price collapse. 2020 was not that long ago. We had negative $37 WTI at one point, and the Texas Railroad Commission was meeting to reconsider quotas for the first time since 1972. They also remember, and so do their investors, 2015. And with China demand weak, with the market well supplied, and with talk of tariffs and trade wars, about the investors in the companies are very, very cautious. And so, and investors are telling them, we will punish you. We will sell your stock if we see you adding to rigs, drilling more. Don't do it. Return the cash. You're seeing growth through acquisitions, the M&A boom in the United States. You're seeing that. But you're not really seeing a lot of drill, baby, drill at this point.
So in conversations with clients, then, what are you sharing for projections when it comes to U.S. oil production? 13.3 million barrels per day, sort of a November 2024 data point, tends to be sort of a 3 months lag. How does that evolve from here on out, sort of on a 2 to 3 year horizon?
Yeah, about 500,000 to 600,000 barrels a day of net total liquid supply growth this year and next, roughly broken down half and half between crude oil and NGLs. So 300 to 400 KBD of crude, roughly an equal amount of NGLs is for this year and next, I think is a fair forecast. And that's what we've been saying. And the risk, of course, is if we do see a sweating or a price drop, which would probably be caused mainly by a weak macro, that is our biggest concern in the next year or two. you don't have to go too much lower than current prices. You get into below $60 and you start to hit break-evens in the highest break-even shale plays. And so the risk is probably to the downside on that forecast, unfortunately. Again, even with the policy environment improving for them, the macro is pretty atrocious.
What about the story when it comes to China? Because there's been growing enthusiasm around some of the tech plays, specifically sort of Alibaba and Tencent and sort of DeepSeek in terms of the technology. I'm wondering what you're seeing in terms of actual crude oil barrels that are being, moved into China as, such a powerful destination for energy supplies.
Yeah, no, that's continuing. China remains a robust crude oil importer. It's even increasing, and we think it's increasing, on the order of 1 million barrels a day a year. It's going higher recently. We think mainly because they are concerned. The leadership in Beijing is concerned about a crisis with the United States, geopolitical, economic. And when that happens, they tend to hoard. And we think hoarding is going on for stock filling mainly. Now, product demand is weak, especially diesel. Gas oil in China is atrocious. We think that's mainly due to weak economic environment. There's some contribution from, LNG trucks and electric vehicle penetration with the gasoline side, but it's mainly a weak macro story. So China is on its knees with demand growth, but that crude oil import is still quite robust. Now, the big story for this year on crude is China's being asked by President Trump to please stop taking in Iranian crude oil. Iran has been the major supplier to China since President Biden allowed Iran's oil exports to grow. And President Trump, as part of his maximum pressure campaign, wants to end that. And so Beijing is being asked to, and we're seeing them start to reduce their oil imports from Iran and go back to the Gulf and say, may I have some more barrels, please?
We also had some economic data out from the United States, and in order to understand what's going to happen to global GDP, the U.S. is going to play an instrumental role in any equation. Looking at consumer confidence, looking at inflation expectations, I think 2025 is going to be the year where the U.S. economy gets really, really wobbly because the recession that many predicted in the last couple of years never really came. Doesn't mean it can't happen just yet.
Right. No, you're right. That Michigan consumer confidence was a big miss. Inflation has stopped falling and is settling in around $3%. We have eggs, Yusuf, over here. I mean, in all my life, I've never seen a problem with eggs. Now, part of it is bird flu and there's culling of chickens and things, but there are cartoons where people are, lovers are exchanging precious gifts like a dozen eggs, so egg prices are high. The consumer is worried. The consumer is nervous and worried. Prices are not coming down, and gasoline prices may not be high, but elsewhere in the economy, mortgage rates are at 7% and higher. The housing market is weak. It's still very tough times, and expectations are high. Expectations are high for an improvement, and if we don't see that later in the year, there could be a reckoning. And this is why I think President Trump, he was anxious to get the oil prices down and inflation down at 10-year rates down. And he and Treasury Secretary Bessent are very focused on that because they know the consumer mood can get pretty sour if it doesn't happen.
What do you think the Federal Reserve is going to do then? Because if they decide to cut rates, it could be a bit of a windfall to consumers, to demand for oil and gas. Or do you think that they're seeing these inflation numbers and they're like, what, this is getting heated again. We're going to leave it with the president and his team to figure out?
I think it's the latter of what you just said. I think they are firmly on hold. They do not like seeing inflation stop improving. So it's sort of bottomed out and is stable at a too high rate. 3% is not acceptable. At the same time, inflation expectations are ticking up. And Yusuf, if you have to ask me, I tell folks, we hear about Greenland and Panama and all these other things. If you ask what's going on in Washington, what is the Fed focused on? What is the Trump administration focused on? What is the Congress really focused on? It's all about this big tax bill. It's all about the debt and taxes this year. That's the big one. In some ways, these other issues are almost distraction. But I tell you, they wake up every day thinking, How are we going to extend these tax cuts? Are we going to blow the debt out another $4 to $5 trillion? How long will the bond market accept $2 trillion annual deficits in peacetime, much less increasing it? Those of us of a certain age remember the term bond vigilante from the 1980s and early 1990s. Well, they're back. The biggest thing, Yusuf, and I think the last 6 months has been.
Are you saying you're a little bit older than I am? It's just a couple of years.
Maybe, I don't know. You're a young man, but I certainly remember the bond vigilantes of the early 1990s. James Carville, President Clinton's advisor, saying, "When I die, I want to come back as the bond market because it intimidates everybody." Back then, when Washington was irresponsible on the debt, immediately 10-year rates would go up. You're seeing that now. Again, I say the Fed cut rates by 100 basis points last year, and then very usually long-term rates rose. That's a warning sign.
I mean, on this show, we don't just look to the month-to-month data. This is also about the longer-term trends. And so, one thing that we need to discuss is sort of speculation around what some of the big oil producers in the world are going to do in terms of the funding currency, right? So at the moment, the majority of transactions are priced in US dollars. And we've seen sort of experiments and ideas, be it Indian rupees or dirhams or sort of Saudi riyals, and obviously all very small scale. Do you think that that's going to pick up, even Chinese yuan? Is there sort of room to run here?
So I don't see a big shift in the use of the dollar as a transaction currencies. Its inherent benefits and superiority are just hard to deny, as frustrated as many other countries probably are with that. The renminbi, Bitcoin, the euro, they're either not big enough, not established enough. In the case of the renminbi, especially, China won't make its capital account convertible. If China ever decided to let you take money out of China, to move it in and out, and to afford the legal protections and the flexibility to export it and import it that the United States has, if they ever did that, they would be a serious contender. But they'd probably have to deal with massive capital outflow. They'll crush the economy. So they won't. So really, the United States is the only game in town. Now, Yusuf, I do have a big asterisk on this. We're entering into new territory here. There's talk of a Mar-a-Lago Accord. Again, those of us of a certain age will remember the Plaza and the Louvre Accords. Right now we're talking about tariffs, but there's going to be a discussion about holdings of the dollar, foreign sovereign holdings of long-term debt, whether they will swap out their short-term debt for long-term debt, whether they will continue to hold dollars under what terms and so forth. I think there's going to be a tinkering with the mechanics of the global financial system in a way we haven't seen in many decades. And that's the one thing that could get foreigners to start saying, you know what, we've got to find somewhere else. Now, again, there aren't good alternatives right now. But if we start to tinker with the financial architecture, if you will, at least the search for an alternative to the dollar will intensify.
I mean, the group OPEC Plus is watching this very, very closely, sort of a coalition of major oil producers led by Saudi Arabia. And they've gone through several iterations. As you sort of describe a potential reset in the global financial architecture, is OPEC Plus's role going to get faded out, or the leverage they have? Or do you think that that's a parallel, separate system that can coexist with anything new that's created after?
No, I think OPEC Plus has become an important integrated part of the global financial and economic architecture. President Trump certainly feels that way. He said at Davos, I have two problems, Russia-Ukraine war and inflation. And both of those problems will be solved by Saudi Arabia and OPEC Plus, please lowering the price of oil. Believe me, Washington's very much focused on OPEC Plus and particularly Saudi Arabia and UAE and their role in that. Now, I think, again, they've been doing a good job recently. They've had some drama, 2020, 2015. In a way, that drama and that unpleasantness creates the motivation to stick together. And they're doing that. And I think going forward, they will continue to provide that stability function. I don't see them flooding the market and crushing the price of oil.
So, so in the spirit of making sure that you build up your buffers and resilience so that you can take on any potential volatility, what can be done better from OPEC Plus? Because when sort of the previous OPEC Secretary General Mohammed Burkindo was at the helm, I mean, he sort of brought the idea of OPEC Plus into play, sort of more regular meetings. What would you suggest if you were in the room now and be like, you know what, we need some big ideas for the next 5 years?
Yeah. Well, my big idea is, and I know it's controversial right now, increase capacity. Youssef, this is the year when the idea of peak oil demand by 2030 will.
That's more than controversial. Now you're going into a very dangerous area.
You heard me say it over and over again. This is the year when peak demand itself peaks. The IEA is going to flip. BP just announced they're getting rid of their targets. I mean, we're moving on. Net zero is yesterday. AI is tomorrow. The idea that oil demand is going to peak by 2030 is wrong. And the consensus is wrong on that, and it's going to shift. And if that view is right, then we are underinvested in 2030. Not this year, not next year, not even the year after that. If anything, as we discussed earlier, there's risk of oversupply. OPEC Plus is more likely to have to reduce production, to keep prices stable. However, when you look to 2030 and the early 2030s, I think we're short, underinvested. And my advice to them is to, if you're Saudi Arabia, dust off those plans for 13, for 15 million barrels a day. We're going to need more oil. We are not investing enough to meet what is likely future demand. This whole period between the Paris Agreement in 2015, and I would say even late 2021, certainly the Russian invasion of Ukraine, and certainly now, read the room. Look what's going on with politics around the world, in Germany, in France, in Canada, in the United States. We're just not seeing this drive for net zero. And I think we have to prepare for a tight hydrocarbon world at the end of the decade. That's before we even start talking about what AI is going to do to juice natural gas demand.
Who's doing the most in terms of bringing on new capacity in the next year or two between sort of the UAE and Saudi Arabia, sort of in the Gulf?
Well, the UAE has done the most, including in terms of adding to their capacity. The Saudis have been sort of stable, 12.2. The UAE has been bulking up. Kazakhstan's adding bigly. Iraq is adding to their capacity. That creates a little bit of a problem near term because they have to comply with their quotas and their commitments and so forth. So those are some big, but outside of even the United States, look at Argentina. Argentina has been a surprisingly fast grower there in terms of its production. Guyana is adding, but within OPEC Plus, I think the main story is sort of Kazakhstan and Iraq that have been adding capacity.
Let's get to a bit of a personal segment. What got you into energy to begin with?
Poverty and drift. I wanted to be a military historian, but I didn't get rich in the Peace Corps. I served in Senegal, West Africa, in a mud hut for 2 years for the U.S. government program. Didn't get rich, and I needed a job at grad school just to literally eat. And I was hired by a lady, Sarah Emerson, the head of ESAI, great energy consulting firm, to count barrels. And I was happy to do it. And this is during the first Gulf War. And after graduating, I looked at the pay scales of history teachers and the pay scales of oil analysts and decided to go into oil. And I loved it because oil brings together the things I love: policy, geopolitics with markets and so forth. So I'm glad, but it was drift. I did not plan for it, I'll tell you that.
In all your travels around the world, what's sort of the wildest story, an anecdote that you can share?
Well, I'll share an anecdote, and this is with your former colleague and our friend Manus Cranny. So I was fortunate to attend the historic OPEC Plus meeting in March of 2020 when they were trying to respond to COVID and they failed to agree on production cuts. Russia opposed them. And we'll all remember well what happened after that. Well, I was at that meeting with my friend Halima Croft. And then the two of us went to Saudi Arabia. We had scheduled to go to Saudi Arabia to speak at a conference there. So it's Sunday morning after that momentous meeting in which OPEC Plus not only failed to agree, but Saudi Arabia, and they announced they would be going to maximum production.
I remember that. Okay, what happens then?
On the TV, I'm in my hotel room with Manus on live Bloomberg. And he says to me, they always ask, Goldman says, crude had closed around $45 on Friday. Goldman says, you're always asked about Goldman's views, right? Goldman says that the price of oil could fall to $30 a barrel. And I said, Manus, because having done the work on the economics and written the book, I said, crude oil is likely to fall closer to $3 a barrel than 30. And then, Youssef, you're not supposed to have dead time and live TV. I think I shocked Manus where he was just quiet. I thought we lost the connection. And he said, what? And I said, closer to 3 than 30. Now, I wrote it down, what the price needed to do to get there. And it did in mid-April. And Manus, to his credit, he went on X and he said, Bob, I thought you were whack when you said it, but you were right. So that was my wildest moment, really, because you just never seen the floodgates open like that in modern times. But from my research of crude oil volatility, and I knew that we were going to fill up inventories and the price would force in production. That was what's going to happen mathematically, although we had not seen it, in many decades.
You also served on the White House sort of staff as special assistant to the president, on the National Economic Council. I'm seeing here also senior director for international energy on the National Security Council. What was it like advising the George W. administration on energy? Is there anything you can share about how the mechanics were at the time, or anything you took away sort of for the remainder of your career?
Sure. It was a great honor. I worked directly for the president. The first crisis was the California electricity crisis. And even as we see now with President Trump, it takes time to fill out the president's staff. I was introduced to President Bush on the Monday morning after inauguration, the very first day, as the staffer who would fix the California electricity crisis, even though I was a barrel counter. Mm-hmm. And so I got to know, when you have a crisis like that, you get to know the president, the vice president very closely. He gave me some nicknames, Electric Bob and Light Bob, meaning like light bulb. I have to explain that one, but Electric Bob is my famous nickname. And it was an honor to work for him. What surprised me most in some ways was, before going in, and again, I had not worked in government before, except for the Peace Corps, I expected it would be partisan battles all the time, Republicans against Democrats. Well, you learn that a lot of energy is not partisan. It's regional. It's the coasts don't like ethanol, but the Midwest does. The West Coast likes hydro. The Southeast likes gas, and there are these regional and other types of drivers and shapers of energy policy. But I was there from, I say, Enron to Iraq. It was a wild time for both domestic and international energy from 2001 to 2003. I saw just about every type of crisis that you can have and every type of policy formation that you can have. So I was very grateful and honored to have served at that time, and really appreciate it.
You had a lot of successes there, but also in hindsight, is there anything that you say, we really messed up there or could have done a lot better?
Messed up and done better? Honestly, none come to mind. I don't want to sound like a recent presidential candidate who couldn't find fault and so forth. But, I don't recall things we could have, done better. I think one obvious area where, and I wasn't read in on all this, was how we did Iraq. And why we did Iraq, how, and the follow-on there. I think, that possibly could have been improved. That's probably the one area where I think I and others would want to scrub it a little more, but I can't say I can identify here's exactly what we did wrong and so forth.
If you think back at all the people that you've interacted with, who's had the most profound impact on, your life or on sort of the trajectory of where things went? I mean, I wouldn't necessarily say he was a powerful force in, my broadcast career into business journalism. But when I think of the oil industry, obviously interviewed a lot of the CEOs and a lot of the ministers and secretary generals. But Mohammed Barkindo, was inspiring, and it was also a great guy in person. And once we had just broken some news. I was with Bloomberg at the time, and the price was moving, and he passed by, and I was like, a quick comment, Mr. Barkindo, and he's like, Yusuf, you keep breaking the news. Stop breaking all these news. I was going to invite you to dinner tonight. You look too good and you break too much news. No dinner for you.
Mohammed is terrific. Yeah.
Yeah. So, I mean, that's the story that comes to mind and that I wanted to share. But like in terms of sort of inspirational characters, who comes to mind out of the energy industry? I mean, you can go back in history as well. It doesn't have to be recent.
Yeah, I've been very fortunate. I have like a committee or a list of folks. Ed Morse, Dan Jurgen, the recently departed Larry Goldstein. So those gentlemen who had, great careers and have great careers in energy consulting and have, again, blended that history with the policy and the geopolitics. Larry Lindsay, for whom I worked at the White House and the National Economic Council, just on how that blend of policy and markets. Paul Tudor Jones, who I worked for 12 years and remains a client, in terms of just markets and the importance of timing and the importance of being objective. And, so these are some of the folks who have inspired and inspired me over my career.
What advice would you give anybody who's looking to sort of start a career in energy consulting or energy more broadly?
Yeah. And I do. I tell all the folks I talk with. And again, it was my experience, but only through drift. I didn't plan it this way. If you want to get into energy, or for that matter, anything else, start out with an objective lens. Learn how something works before trying to save the world. Don't go right into advocacy. Don't think you have all the solutions. Learn how a market works. Learn how an industry works. Learn about the geology, the economics, the policy, the trade-offs, the nuances, the uncertainties. Learn a debate. And in the White House, I learned this, and I tell this with my clients, even with folks at Rapidian, I say, when we do an analysis, I want you to write this report and have the reader not know what your bias is. Provide that ever so scarce a thing we need for sound risk management and opportunity seizing. Objective analysis and information. Learn how something works. Later on, equipped with that knowledge, you will be a more effective advocate. People will listen to you because you can at least understand the range of a debate, the trade-offs involved. So that's what I say. Analysts for, the old movie, A Karate Kid, where he learns to paint the fence, do that. Learn just how something works. Study a market, study an industry, be objective, then save the world.
And Karate Kid, that's a blast from the past for sure. What was your greatest struggle, sort of, when you look back at either your personal or your sort of professional run?
Yeah, the thing I had to work at the hardest was economics. I've never been a numbers guy. I struggled in math.
I find that hard to believe, Bob.
Well, listen, I'm going to share a story for the first time in public, and I probably shouldn't do this. But to get out of grad school, I had to have an oral exam, and I get to choose one focus, was history, and I aced that. He asked me questions, we talked, no problem. Then I had to have the economics. We all were required to study economics. And my economic professor said at the end of our back and forth, he said, I'm going to pass you, but I want you to promise me you'll never get in a job that requires economics. And I said, done. I reminded him of that 10 years later when I was on the Bush National Economic Council. And my book, Crude Volatility, won 3 economics awards. So he's deceased now. I'm sure he's turning in his grave. I say this only to say I really had to struggle and work to grasp economic concepts. It's definitely been my biggest professional struggle, and I'm glad though that I've been able to make some achievements there. So you wouldn't have guessed it knowing me 30 years.
No, not at all. So I'm not sure I want to even ask the next question in terms of what your hobbies are. How do you stay motivated?
I'm a drummer. I started a White House rock and roll band, the Compassionates. Both of President Bush's chiefs of staff were in my band. I have another band, we fight breast cancer, called Pink Noise. Tony Blinken, the recently departed Secretary of State, played with us just before he went in the administration. Yusuf, there is this bipartisan energy, intelligence, rock and roll subculture in Washington, and I am very proud to be a part of it. My main band is called Sound Policy. You can enjoy the different meanings in that. So I love rock and roll. I'm a drummer. That's my hobby, and I do it whenever I can.
All right. Another reason then to come out to Washington, D.C., get the lowdown there. And then who would you have lunch with if you could have sort of an open selection? It can be a head of state. It can be, somebody, an investor. It can be, it can be anybody really. If you could, somebody you haven't met yet. So who would that be?
Vaclav Smil, the smartest person on the planet when it comes to energy and so many other things. Bill Gates says he waits for Vaclav Smil's next book like people wait for the next Star Wars movie. So I haven't met him yet, but I would love his take on what's happening in not only energy, but science, AI. I think he's one of the smartest, and most intelligent, and most objective and thoughtful people alive today.
All right, so that's a wonderful note to wrap up on. And tradition of the show is we try and make the lunch or the breakfast happen. So we'll get cracking on that. Bob, Thanks again for your time.
Thank you, Yusuf. Great to be with you.